All right. Good morning, traders. It's Melissa with Price Plan Profit. Today is Saturday, January 17th, and I'm going to get started here with the weekly live session. In this session, I like to go over the overall market, the cash S&P 500 from a top-down approach to get an idea of different levels I am looking for support and resistance for the week, and talk about the macroeconomic data that could be coming out this week that could cause some volatility in the markets. And then I give a breakdown of stocks I am looking to potentially swing trade if they come down to my buy zones for next week. So before I get started with the SPX important levels for this week, if you wouldn't mind doing me a favor, hit the like button. It doesn't take but a couple of seconds, and it just helps out with the YouTube algorithm to get this information out to traders that may be struggling to be profitable in the market. All right, good morning, Michael and Anna, DMC, Bill T, good morning. Of course, Deepak and Mike, the early birds that are here every single Saturday, bright and early. Good morning to all of you. Let's get started with the SPX weekly chart. Last week's candle is a doji candle. A doji candle simply is a candle of indecision. A candle of indecision meaning that neither the bulls nor the bears were leading this market last week. You have buying pressure evidenced by this bottoming wick here. You have selling pressure evidenced by the topping wick here, and then the body of last week's candle. Notice it is very narrow and it's just kind of in the middle of that range. This is very good example of the market being indecisive, also known as consolidation. Maybe you've heard of choppy conditions. That's what we saw last week. And it's an important candle for me and those of us who trade the trendy methodology, because last week's candle is an inside candle. And that is my favorite candlestick structure. So next week, we could get an inside and up or an inside and down and create potentially a buy zone or a sell zone on the weekly chart. Now, what needs to happen, honestly, is we need to get through some economic data that the market is waiting on, as well as we are diving headfirst into earnings, right? The financial sector mainly kicks it off, and they reported last week. You got a mixed bag there. Morgan Stanley did well, Goldman Sachs did well, but JPM, Bank of America, Wells Fargo, they didn't do so well. So you got a mixed bag there on as far as the financials reports went, earnings reports. And so now we're going to start seeing the tech names, such as Netflix usually kicks it off, so they'll kick off earnings. Then we're going to roll into the Mag 7s. Super duper important time. Lots of volatility can occur around earnings season, so I will be paying special attention to those earnings reports, not trying to guess what direction the stock is going to go based on the earnings report, because I have found that you could have good numbers come out and the market doesn't like it and the stock tumbles, or you could have bad numbers come out, the market likes it and the stock rockets up. I don't really trade earnings. That's just not my cup of tea. Speaking of cup of tea, let me grab a drink. All right, not my cup of tea, but I am aware when different names are reporting. As far as macroeconomic data that is due out next week, nothing Monday because U.S. markets are closed on Monday, and then really nothing on Tuesday. On Wednesday, the POTUS is speaking. President Trump is set to speak. We got some pending home sales. That's the main things for Wednesday. So, of course, we can expect some volatility anytime the president is speaking. Then on Thursday, you got core PCE and final GDP numbers coming out, as well as unemployment claims. Those are market moving, potential market moving economic data reports that are due out. And then on Friday, we have flash manufacturing PMI, flash services PMI, and then, of course, like every Friday, consumer sentiment and inflation expectations. So depending on that economic data, of course, rate decisions, you got some Supreme Court, something, due out about all of that. Look, long story short, the waters are murky right now, okay? And so when the waters are murky, the boat just kind of drifts to and fro, not going anywhere with any type of momentum. This is actually common during January, the first part of January. I'm not surprised. I have put out other videos, couple over the last few weeks, talking about this type of price action during the first quarter here. So I'm not surprised, but I know that I need to trade this type of price action different than maybe how I was trading in 2025. Those momentum breakout trades really, for the most part, are not working right now. And so for that reason, I am a dip buyer, and I'm taking profits at the top of that choppy range. That is how I am choosing to play it. Going back to SPX, indecision candle on the weekly, 68.65 remains the first major area of support on this weekly chart. And the area of resistance is going to be the all-time high at 69.86. Now let's look at the daily chart on SPX. So when we are in choppy conditions, you will often see that your buy zone and your sell zone are close to each other. This is close, 70 points on a daily chart. That is very close. That equals chop. At the top of chop, we're expecting selling pressure. At the bottom of chop, we're expecting buying pressure. And basically, price is just trading between these two zones. Nothing has changed all of last week. Here's the 5 days of last week. You absolutely stayed between the buy zone and the sell zone. Pretty neutral there. Now let's look at the 4-hour chart. And nothing is really going to look any different from the 4-hour chart. Here's your buy zone. Here's your sell zone. This is the price action of all of last week. Monday, we opened up, pushed up into a sell zone. We actually made a new all-time high on Monday. Then on Tuesday, price opened in that sell zone, and we sold off to the bottom of the sell zone, where we just kind of camped out right here at the upper weekly edge of the trendy edges. This was Tuesday's close. Then on Wednesday, when we woke up, price had gapped down below the sell zone. This is what we expect as supply and demand traders. If price is in supply, I expect price to fall back down and seek out demand. Where are the buyers? And that is what happened on Wednesday. So once we hit the buy zone here on Wednesday, that block of orders, the demand, right? This is where buyers stepped in, and we recovered Wednesday afternoon almost the entire drop of the first 4 hours of the market. Then on Thursday, we woke up to a nice gap up, gapped up right back into the sell zone. So, not being overly enthusiastic in this sell zone is what I was telling the room. Hey, you need to exercise caution here. Please don't get euphoric and get all bullish in a sell zone. We need to keep our head on a swivel and be ready, because we know the market is in choppy conditions. And sure enough, on Thursday, we opened up about 30 some points, but guess what? We opened in a sell zone and we sold off on Thursday. Then on Friday, again opening in that sell zone, and it was just a slow trickle. It was a very choppy day, but it was sideways to down from the sell zone. So long story short, we are trapped between a buy zone and a sell zone, and until that changes, I, for one, will be playing any kind of swing trade as a choppy market. Now, the trend is bullish on the higher time frames, but current conditions is chop. So, I will play my swing trades as such. What that means is, for me, in a buy zone, I want to buy a dip. But at first target, I am taking profits. If I'm only in one contract, I am taking profits, exiting the position. If I have multiple contracts at my first target, I am scaling out of half of my position and then moving my stop to break even. If we get continuation in this sideways market, great. I will then trim my position at the second target. But if we get a rejection at that first target and my price goes back to break even, I'm going to exit. I'm not going to give away profits in a choppy market. So for swing trading, that is my plan going into this week. Now, let me talk about how I search for potential trades when, number one, the waters are murky, and number two, you're in the heart of earnings season. I trade straight calls and straight puts. I trade from a cash account, so I need to have movement, right? The price needs to move. If it is just stuck and flatlining, when you trade straight up calls and puts, that is not good for the option premium because of time decay. So I need to search out names that are outperforming, that are performing better than the market, that are actually trending to the upside and not just chopping. All right. And the way that I'm going to do that is, number one, I'm going to look for things that doesn't have earnings coming up in the next 2 weeks. Number two, I'm going to look in areas of the market that you might not typically swing trade. Like everybody loves to swing trade the Mag 7. Well, guess what, folks? The Mag 7 is a lot of the problem of why the S&P 500 can't do anything. It's chopping back and forth. The Mag 7 are showing weakness for the most part. Now, Google is looking great, Amazon is fine, but for the most part, the Mag 7 is showing weakness. For that reason, the S&P 500 is stuck until the Mag 7 can pull the NASDAQ up and above a very important resistance level of 25,880. We're stuck in this chop. So my focus is not on those magnificent 7 names, so to speak. You won't see them really on my watch list because there is just a lot of uncertainty there. I want to look at names that are outperforming, that are in nice bullish trends, because the overall trend of the market is still to the upside. So I want to look at names, if I'm looking at daily charts, that look like APLD, right? This is since the end of December where we based out here, and then we started moving up. This is a beautiful uptrend. Your EMAs are all stacked. The price, we are making higher highs and higher lows. It's just a nice looking uptrend. So a stock like Applied Digital that does not have earnings in the next 2 weeks, that's in a very clear uptrend, captures my attention. Now, I am not a breakout trader. I don't typically buy calls at highs. What I do is I wait for a pullback into a buy zone, and then I want to buy calls. So if I show you here, Applied has a really nice looking imbalance candle on this 4-hour chart. What I mean by imbalance candle is it is a candle of larger size than the other candles. All right, this is a powerful move from an inside and up candlestick structure. So this becomes my buy zone for Applied Digital. I would need to see this name pull back before I would take a trade. But my buy zone is $33 by $30. That is $3 of risk. And as far as reward, I'm going to target the upper weekly edge by $40.20. So my risk is 3. My reward is approximately 6. 2-to-1 risk to reward. I like the trade. So Applied Digital, that would be my trade plan. As far as a stop goes, I would watch a daily candle close below this $30.01. If I run some Fibonacci's, because I love trading Fibonacci's of this bullish run here on Applied Digital, you can see that that 618 is going to be here at about 29.56. What I want to do in this, even though that is the 4-hour inside and up, I'm going to bring my stop down just a little and include that golden Fibonacci level that's so important. So I'm going to move my stop to a daily candle close below 29.40 here. So I would need a pullback of about $4 on Applied Digital. It could definitely pull back into this zone this week if there's some weakness here. And I would want to be a dip buyer in this zone on Applied. Up next is ASTS. This was a beautiful trade. This is actually a name that I gave you last week. I don't know if anyone caught this from the zone I gave you last week, but it was absolutely amazing trade. This was the zone last week. It went from about 90 to 84 down here. And we pulled back here on Wednesday, I believe, or Tuesday, Wednesday time frame, we pulled back to that buy zone and price shot up from $90 to 120. That's huge. That's 30%, guys. Not if you happen to catch this ASTS trade, I am sure your profits were beautiful. As far as the new trade goes for me, I now am using this inside nub plus this inside nub to create a buy zone at 94.61 by 83.91. So you got about an 8.5, $9, 10, let's see, $10 risk here, and the reward obviously is greater than that, about $20. So good risk to reward, but I would need to see a pullback in ASTS. Okay, Barrick, the gold space has been doing wonderful. Barrick is one of the leading gold miners, and I went ahead and kept it on my list. It doesn't have earnings in the next 2 weeks. It has a clear buy zone. We have not came back and tested it yet. It's 47.81 by 45.45. It's an inside and up candlestick structure. That's what creates the buy zone for me. So you got about $2.30 of risk and basically about $2.70 of reward. So it's about a 1-for-1. It's not one of my favorite setups on my list, but I went ahead and kept it on here just in case I get a pullback. I would wait for confirmation because gold is extended on the higher time frames. I would wait for confirmation in this buy zone for Barrick and then take the trade back to the upside. But I'm going to pull down this profit target from the high there, and I'm going to use that weekly edge, the upper weekly edge, and say that my target's going to be 50.22. Now, Barrick is not at all-time highs. If I go to this weekly chart here, it's going to give me the all-time high on Barrick on the weekly chart all the way back to 2012. And so what I'm going to do, rather than finding this on the daily chart, I'm going to find this sell zone on the weekly chart, and that's going to give me my target for Barrick on the daily. And I'm sorry, that all-time high was created in 2011, long time ago. But that's going to be my sell zone or the big target for Barrick Gold until it reaches that level. All right, so now let me go back and look at that daily chart again. And there is my target for Barrick. So first target is 50.22, but ultimately looking for 53.5 by 56. Okay, buy zone, trim, target. All right, let's look at Citibank now. I told you most of the financials have reported. I believe the credit card companies like Visa, American Express, etc. have not reported yet, so you could get some volatility. As far as Citibank, it really did better than, say, Bank of America or Wells Fargo that broke down below their buy zone. So Citibank is an outperformer. It has a buy zone that has a pretty small risk here, about $1.50, $1.75 of risk there. And as far as rewards, I would look to trim here at about 118 and a half. So the risk is small and the reward is about a 2-3 to 1 there. But if I get this pullback, great. If I do not, you can see that the distance, sorry, from where price is currently at to the sell zone is only about $4, a little less than $4. So it's just not worth the risk of $8 taking a trade all the way up here. So I would wait for a pullback to about 112, 112 and a half, and set my stop below 110 and target 118 and then 122 by 130. All right, so that would be my trade plan for Citibank. CDE, this is another mining name, outperforming. I actually like this trade more than Barrick. My buy zone is going to be here around 20 and a half by 18. You got about $2, $2.50 of risk there. That first reward is from way back when, and it's going to be 23.62. Then above there, 26.25, and then ultimately 28.80 by $32. So a risk of approximately 2.5. The reward's going to be just over $3, so a little better than a 1-for-1. And then I would target these targets above on CDE. Next up is Copart. I told you some of these names you've probably not seen and not traded before, but here is one that has, look, on the daily chart, right? Hi, Debbie. On the daily chart, we came here and made all-time highs all the way up at 63.85. And this thing has been falling until recently, until we got a little bit of a rotation into some small cap names, okay? I talked about it. One of my very first videos of 2026 was watching for some rotation into these small cap names, and you can see CPRT, Copart, it got that. So we based down here, we got a flush low, and then you got some consolidation, and then we took off. Then we consolidated again. What gives me a bearish buy or a bullish bias here is because the bears did not win in this consolidation and roll back over to support. No, they had a very nice daily candle after the consolidation with a buy arrow, and we are in a nice squeeze. If you use the Squeeze Pro indicator, we're in a nice daily squeeze. So for that reason, I'm looking to buy the dip on CPRT down here at 40.13 by 39.45. Now, I'm not going to give this a lot of room to fall all the way back down to this buy zone. I'm not willing to, in the current market conditions, I'm just not willing to have a risk of $3.50 on this name when the ATR, the average trading range for the month, is only 5. So that would be a long time to set in this name. All right. So with that being said, I got a small risk here at this inside and up candlestick structure. It's about a 70 cent risk. My initial target is $1 reward, then about $2 reward, and ultimately up here at 42.68 by 43.70. So this would be my trade on CPRT. A daily candle close below 39.45, and I would exit the trade, this buy zone would be invalidated, and that is reason for me to stop out of the trade. All right, let's look at Corteva here on the daily chart. Again, waiting for a pullback. So I got a nice buy zone. We actually, I thought possibly when I had this name on my chart on Friday, right? Last week we looked at this name and we were down here and I was like, yeah, we might get the pullback to this buy zone. But my alert never went off, and I don't just sit and stare at these potential swing trade charts. When the alert didn't go off last week, I of course didn't get the trade. I wish that I had my alert setting up at about $68 because it was a great dip buy, but I didn't. So what I've done this week is we have a lower weekly edge here at 68.28. I want my alert this week for Corteva to be at that lower weekly edge, and my buy zone remains the same. This thing is continuing to stay in a squeeze on the daily chart. I'm still interested in buying the dip. I'm just going to create my alert a little higher than what the actual buy zone is and see if this alert goes off. If I get a confirmation here at the lower weekly edge, then I would be interested in starting a position with half allocation here and saving the other half of my allocation for a pullback into my buy zone. All right, first target again is 70.55. That's your upper weekly edge. And then my ultimate target is still up here at 73.89 by 75.91. All right, awesome. Dollar General. Now I own this stock from a equity standpoint and have for a while. I actually sold it all back a year ago, I think, in May, before it dumped. And then I re-engaged because I believe in the company. But I have a buy zone here on DG at 143.61 by 139, so about $4.50 of risk, approximately $8 reward. So my first target would be 151.41, second target 154.75 on DG. My stop would be a daily candle close below 139. In phase, I went back and forth as far as putting this one on my list. And let me tell you why. Because you see, when you have the daily or the trend labels and you have red, green, and yellow, that's not my favorite thing to see on those trend labels. So in phase definitely isn't at the top of my list of things to trade, but it's interesting because it's pulled back into support 1, 2, 3, and 4 days down, pulled back into support here, very close to the original buy zone I had. But if you look, you have an inside and up right here, so it's actually setting right on top of a buy zone right here. The reward is going to be up here at 37.32, then 39.22, and finally 41.28. So not my favorite chart, just because we have a rainbow of colors for trend, but one that is interesting. I used to trade in phase quite a bit, and I wanted some sort of energy name on here because there has been some rotation into these names. So in phase is the one that I went with. As far as Chevron and ExxonMobil goes, I am a stockholder of those, and obviously they've been doing very well. So I do have exposure as far as energy and oil goes, but in my trendy account for swing trades, I do not have any exposure in this area of the market. So in phase made my list. I'm looking for a buy zone of 34.26 to 33.45, and then I'm targeting 37.32, 39.22, and 41.28. My stop would be a daily candle close below 33.45. All right. Let's look at gold miners sector here. Obviously, gold miners, gold, all of that has been doing great. I am interested in buying a dip, but only if this thing dips. Okay. I want to see a dip down to 91.81 by 88.09. This would be my buy zone. And then I would be looking to play it back up near all-time highs. I'll use this upper weekly edge at about $98. That would be my target. If we take out the high, then I will draw Fibonacci extensions to get further targets to the upside. But for now, that I'm going to say 97.94, which is the upper weekly edge, would be my target on a gold miners swing trade. Speaking of gold, let's talk about gold and where I would be a buyer again. Made some really good profits on gold earlier this month, and I'm looking to buy a dip again. But like I said, gold, I believe, needs to have a healthy pullback. A healthy pullback for me in GLD would be 411, basically by 406. This is where I would be looking to buy a dip, and my targets would be 421 and then 425.73. All right. So if gold dips back into here, this is where I want to be a buyer. I am wrong. The trade is invalidated. I would stop out on a daily candle close below 406.15. And targets are above, as you can see on my chart. IWM, small caps, I've talked about this in past videos, and look, that's a beautiful uptrend. When the NASDAQ looks like this, small caps looks like this. We talked about this in one of the very first videos of 2026. I think it was actually towards the end of 2025. I said, don't be surprised if you see rotation out of your big names into your small caps. And that's definitely what has happened. Now we are extended. I'm looking for a pullback on IWM to 261 by 258.24. You got an inside and up candlestick structure there. If you run Fibonacci's of this move, I want you to look and see that that buy zone is going to line up with what we call the bull channel. So I like a dip buy on IWM down here near 261 by 258. I'm targeting 266.19, which is the upper weekly edge, then 270, which is a Fibonacci extension target, and 277. Okay? All right. Up next, Monster. This thing, it looks great. I mean, it's just nice bullish trend since the 1st of January. Kind of looks like IWM, but it's extended. I need a pullback. I went ahead and left it on the list, but it would take a pullback to 75.46 for me, just because we are so 1, 2, 3, 4, 5 days up. Then you had a couple, 1, 2, and 3 days of consolidation. You could get the continuation move to the upside here after consolidating these 3 days, or you could get a rollover. I said when I first started that I don't intend to play breakout momentum trades, and I'm sticking to that even for Monster here. So I would need to see a pullback into the buy zone, 75.46 to 74.61. That's where I'd want to be a buyer. And then I would be trimming at 77.64, 78.76. All right. NVIDIA, I left a semiconductor name on here. I traded this one last week, just like I told you I would. And that was, I'm going to take what the market gives me. I got in one contract here on NVIDIA. I had an opportunity to add right here on the 14th, but I was busy. I did a class on trading SPX for income, and we were in that session. And I was focused just on day trading SPX. But my alert went off on NVIDIA to add to full allocation here, and I just missed the alert. I missed adding to full allocation, so I was still only in one contract. This thing on Thursday hit my target. I went ahead and exited. I'm glad I did, because you can see we definitely rejected there at that 190 level. So with NVIDIA, if I trade it again next week, it would be on a pullback back to this buy zone. So I would be trading the lower end of the choppy range on NVIDIA, 183.5 by 180. Then I am taking my profits at the upper end of the choppy range, 189 by, let's say, 193. All right. That is the play that I would be interested in NVIDIA for now. Buying the lower end of chop and selling the upper end of chop. I know it's a popular name. Semiconductors out of all of the tech definitely look the best. But it's still, it's vulnerable because of the Mag 7 just not performing well. But NVIDIA is one that it doesn't have earnings till the end of February, so it's one that next week I could trade from my buy zone up to the top of chop, where I would look to sell it. All right. Oscar Health. I've traded Oscar off and on for a while. This thing moves pretty, when it moves, okay? Big moves and then consolidation. It has pulled back into this double inside and up. So this is support. All of your EMAs are inside of this zone here. You have the 200 simple, the 50, and the 21. For me, the way that I would play this zone on Oscar would be on Tuesday, since the market's closed on Monday. I want to watch price action on small time frames inside of this zone. And then I want to execute a trade to the upside, first targeting 1798, then 1909, and finally 2037 by 2187. Oscar is another one that has a rainbow of trends, so it's not my favorite, kind of like Enphase, but it is a name that is right at the buy zone, inside and up, but choppy range. This is buying the lower edge of this chop since the 1st of January, and then trimming at the upper edge, and then looking for a continuation move for a continuation move up to this sell zone. Claudia asks, when you do your blueprint for day trading on SPY, you do it from 2 hour or 4 hour? So Claudia, I actually day trade SPX, and I build my day trade blueprint off of both, to be honest, Claudia. And oftentimes the 2 hour and the 4 hour are going to give you very similar zones. So I use both. I would prefer the 4 hour, but if I don't have the candlestick structure to give me the buy and sell zones, I will use the 2 hour, but I definitely use both. All right, Rocket Lab. Here's another one that, gee whiz, it has just been amazing since December, really, the beginning of December. So if you look at the overall trend, it sat and it chopped forever, July to September, right? And then we got a nice move up where we chopped again for about a month. And then the market rolled over, right, at the end of October into that Thanksgiving week. That's where Rocket Lab began its trek back to the upside. And it has had a heck of a journey up there. All right, here is the fibs from where we bottomed out right before the week of Thanksgiving. And then we caught a bid and up here making new all-time highs for Rocket Lab. So with that being said, this bull channel, the 236 in a very bullish name, is a buy the dip opportunity for me. But what I'm going to say is, because of how extended Rocket Lab is, I wanted to keep my risk small. So there's 4.5 points of risk here. And I'm using this inside and up candlestick structure here. But again, small risk because it is extended. So my buy zone is based on this lower weekly edge. I'm using 86.35 to 81.85. My first target is 97.74, which is that upper weekly edge. And then these are extension targets, basically 109 and 119, and then 132 on Rocket Lab. I've already went over SPX and all the important levels. Let's talk about TJ Maxx. This is another name. I gave you the trade last week. And in the trendy room, we traded this thing to that first target, which was right here last week. This was the dip buy, and it was beautiful. And we got out, or I got out rather, at first target because I only had one contract. And as I've already mentioned, in this market environment, that's the way I choose to play my swing trades. So with one contract, I exit at first target. Then I keep the name on the list. On a pullback to my buy zone, I would be interested in buying again. So for TJ Maxx, that is going to be the lower weekly edge at 155 by the original stop 152. As far as targets go, upper weekly edge by this pivot high 159. So 158.28, 159.48 are the targets above. All right. Now let's talk about Toll Brothers. They have some time until they report earnings. Housing, this has to do with the housing market, right? And it's performing well. It's actually looking a lot better than what it had been looking. So for that reason, I like this imbalance here. Now, right now, Toll Brothers is just consolidating. So in order for it to be at my buy zone, it would have to have a down day. I need a dip inside and up. We have not been back down here. So my buy zone is 138.46 to 132.56. As far as targets go, if we get that big down move, this area is going to be resistance. So I'm going to want to trim somewhere in this 145-ish range. So that would be about $6.50 or so. So it's about a 1-for-1 at first target. Then my next target is going to be up here at 149.61, but ultimately for Toll Brothers, I would be targeting 155 by 169 and a half. All right. United National Foods, UNFI. This is a name that I think I traded last year, maybe, or maybe 2024. I'm not sure. So it's a name that when people are not as interested in the Mag 7, it can often get some attention. All right, it has a buy zone down here that buyers have been stepping in when price is down here. It has a lower weekly edge. It has a nice daily squeeze on the Squeeze Pro indicator. It's giving me a risk of about $1.760. Yeah, about $1.60 here. My initial reward is about $2.30, so that's a little better than a 1-for-1. But my ultimate reward would come in up here at $37.10 by $38.71. So buying the dip on UNFI here at 32.5 by $30.91, and ultimately targeting $37.10 by $38.70. All right. And last but not least, for the things that I'm going to watch into next week, would be Walmart. I am an equity holder of Walmart. We bought this in the trendy room here at Simpler Trading way back down at $87. So as far as Walmart goes, it's in a nice, beautiful bullish trend. I would be looking for a pullback to this buy zone of 112.26 to 109, and then I would be playing it back up to these highs, 120.64. All right. So that would be my plan for Walmart. I would need that pullback. Pullback though, and a daily candle close below 109 would be my stop. I need to mention, if I were to get that pullback, of course, this area up in here would then be resistance. So I have to consider a trim at that area of resistance. So you're looking at about $3.25 of risk, and the reward is going to be about $4.70. So still a good enough risk to reward for me, even at that first area of resistance. So again, the moral of the story, the plan for me is that for swing trades, I am looking outside of what we typically, most traders like to trade. I'm looking outside of that Mag 7 basket. I am looking for names that are in bullish trends that are outperforming others. I am looking for stocks that are at least a minimum of 2 weeks away from their earnings report, and then I am trading them as I do when the markets are in murky, choppy, drifting type conditions. And that is, I buy the dip in my buy zones, and at first target is a trim, or if I only have one contract, it is take what the market gives me and then be prepared to execute the trade again. So the major levels for SPX this week on the daily chart, the buy zone, I'm going to use this lower weekly edge, is going to be right at about 68.98, and the sell zone is going to be 69.63. My dots are simple moving averages. The white dots, those are simple moving averages, I believe. Yeah, simple. So Claudia, is it liquid to trade XSP? I can tell you I have no problem getting in and out of XSP at all. What I will say, Claudia, is that there can be a wide spread, bid-ask spread, and so I always choose the mid of the spread when I'm getting in or when I'm getting out. All right? All right, guys, that's going to wrap it up for me for this week. Thanks for joining me. Thanks for being a part of the Trendy Room or the SPX Room at Simpler Trading. If you're not a part of the Trendy Room or SPX Room at Simpler Trading, I invite you to join me and my trading partner, Trendy John. We trade live in those rooms every day that the market is open. We have an awesome community of traders that share their trade ideas as well. Our trades are alerted in real time through API alerts, so you know what our plan is before we get into a trade, while we're in the trade, and of course you know when we exit a trade. So we would love to have you join us in the Trendy Room or SPX Room or both. So I look forward to seeing all of you next week here at this live session. Have an awesome weekend, and don't forget, Monday the markets are closed in celebration of Dr. Martin Luther King. So enjoy your extra day off.